Welcome back to the Ignite podcast. Today, we're delighted to welcome our guest, John Jahnke, a longtime friend of mine and collaborator. John, could you give a quick intro about yourself and how you got to be CEO of Tackle?
Yeah, my name's John Jahnke. I'm CEO of Tackle. Originally, I was an investor in Tackle, which is an interesting story. The co-founders of Tackle and I all worked together at another startup called Greenplum, and we kind of did that for a little bit. That company became the foundation of a company that was pivotal, that ultimately went public, but we split off and they did a couple other startup journeys. I stayed on that pivotal journey for a while, and then our technical founder Dylan had the idea around Tackle and was like, hey, I think there's something here. We should come back together. So I'm a long time B2B software guy. I started as an SE at EMC in 2000. So long time person helping people kind of solve problems with emerging tech. But it's been a lot of fun to evolve into a CEO gig.
And this is interesting. So we both kind of met right around the same time. You had started Tackle as CEO. And I had started AWS, leading the AI category, and that's exactly when we met. I think it was maybe the first time was on a phone call, and then the second time was at reInvent. How has that changed over the years? I mean, we're talking over 5 years ago now.
Yeah, that was probably, we met originally at reInvent in 2018, and we were about 6 people then, but we saw clear signals of product market fit. We had about, say, 10 customers at the time, and our first lighthouse customer was New Relic, and they're like, hey, if half of what you say is true about this marketplace thing we're in, we've been struggling, we think there's something there. And it's just been amazing to see the market evolve, because in the early days, it truly was the pioneers who saw this vision of the clouds have disrupted the way that most of technology operate, but have yet to change the way that software is sold. And this marketplace thing could be the initiation point of that. But it truly, people weren't really buying that way yet. It was pretty early. But then to see, fast forward to today, the buying behavior has changed. And I always go back to Amazon.com in 2000. You probably bought a book from Amazon. You didn't think 5 years later you'd buy a TV. And then all of a sudden, I mean, today you could buy a house for all you know.
So somebody fact check that. I bet you can probably go buy a prefab
Tiny houses are for sale on Amazon. I know that to be true.
That's crazy. And I remember meeting you guys, and it's one of my favorite stories to tell as an investor, because I wasn't quite making angel investments at the time, and you guys were very much in the angel category with 6 people. And and here we are 5 years later. You're obviously you've raised money. Can you talk about kind of the trajectory of Tackle? And you've been backed by some of the best VCs in the space, and I love to tell the stories this is how big marketplace is. There's this unicorn called Tackle. That I'd known since they were just a bunch of guys working remote mostly, and some guys were from Idaho, and I should have invested, and I wasn't quite making angel investments at the time. But now you guys are, you've gone through some massive growth and some growing pains, of course, too.
Maybe totally. I mean, we raised our initial super seed round in 2016, and that was on the idea, and then we started to initiate building out the platform, and Dylan, who's our founder and CTO, he was the only employee in that first year. And it was a bit of a grind. And that was the product market fit phase where, is this really a thing? What does a product look like? Would people buy it? How would we monetize that? So we were able to navigate that within about a year. And originally we started more so with the theme of software distribution, like thinking about containers and machine images and the problem statement of packaged software moving to the cloud, and how do we demystify that, and ended up in marketplace. So it was a multi-phase journey to get to what the actual problem was. But we got to, let's say, $1 million in ARR, which people, if you follow Jason Lemkin, everyone's like the $1 million milestones when the clouds part, the sun comes out, everything's great. We got there and had almost no interest from institutional investors. And we had some amazing, at $1 million. And we had some amazing companies as customers. Auth0 was a customer, PagerDuty was a customer, New Relic was a customer. These were marquee growth stage startups. And then, but it was a different era. This is in 2019, so slightly different time.
Yeah.
And then Bessemer, we ended up meeting, I met an investor from Bessemer through another Buffalo, I live in Buffalo, New York, and another Buffalo company that was backed by Bessemer was ACV Auction. So one of the co-founders of ACV introduced me to an investor at Bessemer. And I'm like, oh yeah, we have 7 of your portfolio companies as customers. He's like, what? That doesn't happen. Seed stage companies, it's not really how this goes.
It doesn't usually happen, yeah.
And it was funny because then they're like, "Hey, we'd love to," and we were raising a convertible note at the time because we knew we needed more capital to scale, but we weren't exactly sure how big this thing could get. And Bessemer ended up kind of battling their way into that larger convertible note round, and that was in November of 2019.
I remember
And
this because I
then,
was one of the back channeled reference calls that they
yeah,
did.
I
About an
love
hour.
I love how much that, I mean, that's like when people always ask me what it's like to work with tier one institutional investors. I'm like, the thing is, by the time they call you, they know more about you than you could ever imagine. Like one of our
Yeah,
investors called 35 of our customers before I ever talked to them. And I would
that's
get calls
crazy.
from people, and you probably called me back then where you're like,
Yeah, yeah.
"Hey, are
Like,
you
hey, I
guys
just talked to
raising
Bessemer.
money?"
Yeah.
Yeah, like what's going on? So Bessemer ends up investing in that seed round, and then I mean, fast forward to February of 2020, and the world like goes sideways, and we're like,
Yeah.
oh man, first time. I'm a first time CEO, long time startup guys, and between Dylan, Brian, and I, but we had never done it ourselves. And you're like
Right.
entering this global pandemic where you're like, what's going to happen? We're like, maybe we should gas up the car. So Bessemer was like, we'd love to do a Series A, and we were north of 2.5 at that time, and we'd grown really, really efficiently to that point. So we ended up raising a Series A in March of 2020, which, I mean, Bessemer's an amazing firm or an amazing partner. If we would have probably waited 3 months, our valuation probably would have tripled, just because that's when like the
Yeah.
chaos of the funding markets happened. But we
Right.
went from that round with Bessemer to raising a round with Andreessen in January of 21 to raising a round with Cotu and Andreessen at the end of 21. So we went from no institutional money for 3+ years to raising 3 rounds in 20 months.
Right.
And it was pretty wild. And I feel really fortunate, but it all comes down to your customers. Like if you're
Yeah.
delivering value, if people see value in your product and they want to exchange dollars for a fair exchange of service, and that turns into gross and net retention that looks world class, it's actually not that hard to raise money. If you're struggling with those things, it's going to be hard to raise money. And seed
Right.
money is the hardest money you'll ever raise. And I always tell founders, I'm like, it's the most expensive money. It's the
Mm.
hardest money. And that's the time when it will take you 50 phone calls to figure out someone that actually understands what you're doing. And it's like, yeah,
Right.
I believe in it, because
Right.
it's much, the later stage you get, the easier it gets.
Yeah. And let's talk a little bit about, so you raised 3 rounds in about a year and a half, it sounds like, institutional money. Now you got a bunch of runway. And so so you press on the gas. You're
Yeah.
hiring like crazy, growing like
Yep.
crazy. And then like a lot of SaaS companies, you had to make some adjustments, right? Like
Yep.
the realities kind of shifted and you had to make some layoffs. Maybe you could talk to the founders out there of like what that's like.
Oh, it's the worst.
Yeah.
Like, um, I mean, so many hard lessons learned. And I think, we had grown up as a really efficient company. But when we raised that third round, we had never spent $1 of our Series B when we raised our Series C. So we end up with like a very significant capital war chest, $135 million. And it's like, okay, it's time to go for it. Like
Mm.
we have like years of product vision in front of us. We have all these things we want to invest in. Let's go do those things. And then a combination of the market changing and us being incredibly focused on the sector of software, where the one, funding dried up, two, growth didn't evaporate, but growth slowed tremendously, and everybody was kind of in the same state where we were, where they had gone for it, and then
Yeah,
they're like,
you
"Oh
had this
no,
plan and you have this burn
yeah."
associated with the plan. And now all of a sudden that burn is increasing because the revenue is not landing in the way that you thought it would.
And it's crazy when you build. I mean, everyone can build an up into the right plan. It's really
Right.
not that hard to be like, okay, 100% year-over-year growth. What's it going to take? How do I do my
Yeah.
math on how many reps do I need? What's their percentage of effectiveness? You can build the plan pretty easily. What happens is like your burn multiple goes upside down so fast when things start to go sideways at a top line level.
Yeah.
And I think, we ended up doing 2 riffs. There were probably like, this has been the hardest year of my life. And I feel like, um, so many mistakes, like,
Yeah.
but you talk to so many CEOs and everybody has lived through the same mistakes, because you just see it. Like CEOs are optimists, especially early stage
Right.
CEOs, because you have to be. You're trying to change the world. And in general, you're always working against people who don't agree with what you think. So if you're not an optimist, it's going to be a pretty short road. But like in times when things go sideways, you have to like reframe your optimism into this wartime thinking. And we ended up going through 2 restructuring events. And the first one, we didn't think the market was turning as fast as it was. And then the second one, we really had to attack the structure of the company because we built out layers. And I tell founders now, I'm like, hey, a 30% growth company or a 50% growth company looks so different than a 100+% growth company.
Right.
Like that's, and if you like started building
growth
a plan for
hides a lot of mistakes, right? When you're growing 100% a year or 200% a year, you can make mistakes, and it's like, oh, we'll kind of just move these people around.
Revenue solves all business problems. It's like it's so those were, I mean, super hard lessons, but I think we've kind of just, our number one cultural value, it starts with customers. And we just doubled down on what are the problems our customers are trying to solve? How do we solve them in a way that makes sense to them and makes sense to us and allows us to grow? You can't, like Martin Casado from Andreessen's on my board, and he's like, you can't force the market, no matter how much money you throw at things. And if all of the software sector is going through some form of restructuring, you're a victim to that macro level industry movement. And the good news is, no matter what, it's going to return to growth. So, and if you're aligned to the trends that matter, being aligned in our case to cloud, being aligned to the B2B software budget, 2 of the things growing faster than anything in the world, it's all going to work. It's just a matter of like living, and I always tell people like the road to 100 million is not a straight line. It's, and for a long time, it looked like a straight line for us. So we had to deal with those kind of ups and downs.
So let's go back to the transition from distribution to what you discovered, what the problem was for your customers. What was the event, or do you remember when you had the aha moment where you kind of made this shift from like, it's not just about distribution, but it's about this other thing? And what is that other thing?
Yeah, for us, we started to see signals. So we started as the marketplace company. We would help software companies list and sell through AWS, Microsoft, and Google. And it was really a build versus buy problem. They could go build software to try to sell software, or they could work with Tackle. And that theme is pretty consistent. Like Stripe's a really big company because people don't want to build software to sell things. Like Shopify is a really big company.
You could always go down to the bare metal and build everything yourself and spin up your own channel and do the integrations and the marketing. And
so that was where we start. That was where we started, especially multi-cloud. It's a lot of work and it's sneaky complicated. But where we started to see things change was like the marketplace stuff's like the last mile, but people were really trying to say, well, how do I really refactor my revenue system with cloud? And that means you need to build a bridge between their existing sellers and their existing pipeline and the clouds. You need to think about how to use data to make decisions about the best opportunities to take on a cloud go-to-market journey. How do you streamline the engagement between an ISV's rep and a cloud rep in order to align on the outcomes that matter to your joint customer, the end buyer? And then marketplace is the last mile. And really, we started to see those patterns over years. And HashiCorp's a customer of ours, and they were, pretty early customer. And I remember Dylan and I were on a call with them, and this was in like 2019. And they were having success with marketplace. And we're like, hey, what if you guys just gave us all your pipeline data so we could like try to figure out what deals you could accelerate? They're like, no, we're never going to do that. That's crazy. But that was the point. Like in 2019, we're like, there's something there. There's a way for us to like, that's the holy grail. Because if we think cloud will be the most efficient way to sell software in the future, and selling software is the most expensive part of every software company, building the bridge, it's almost like migration factory. Building the bridge between the old world and the new world is a really key thing. So it started in 2019.
It reminds me of like how technology kind of proliferates, right? Or business models. When cars came out 100 years ago, I mean, the original steering wheels were from boats. Yeah. So, you had this like rudder control to steer the car. And eventually we use the wheel, this steering wheel. And so maybe marketplaces are a little bit like that. It's like we're kind of bridging this old way of doing things into this new way.
Yeah. Yeah. We think about it like a workflow problem where the insertion point into the software sales process was the marketplace listing and adding that as a vehicle for someone to choose to buy. But when you start working the workflow, both left and right, that's where TAM expansion comes in. And I always look at like CrowdStrike. George Kurtz from CrowdStrike shows their platform evolution going from like single product or multi capability to now they have like 22 capabilities of the platform, and their customers, once they get to like using 7 parts of their platform, their gross retention is like 99.9%. But that's all the workflow. They started with one part, and then they just kept working the problem and expanding in logical ways that made sense to their customers.
The whole product solution, right? We talked about that in Crossing the Chasm, right? You can hit that segment one, pin number one, but eventually have to have this whole product. Talk about the when is a startup ready for marketplace? Like, how do you know?
Yeah, so we released our State of Cloud Go-to-Market report last week, and it was interesting to see. We actually track the stage company that participates in our survey, and this year 50% of companies were north of $100 million, which we're seeing marketplace move up market. Now that doesn't mean it doesn't fit for earlier stage startups, but I think it highlights a cautionary tale for early stage startups. And for me, it's like the best time is when you have 1, executive alignment, 2, a very clear product strategy that aligns your product with the clouds, 3, a reason why a cloud buyer benefits from using your product and the cloud. And if you have those 3 things, then you're set at the foundation. And we used to always think about, well, like, is 1 million in ARR? Do you want product market fit? Is it 10 million in ARR? And the answer is it really depends. Like if you have those things, because we've seen companies launch day 0, like they launched their product,
right?
And it's marketplace native, and that's how they like teach their
MongoDB
first
comes to mind, right? Like most of their revenue is marketplace native, and it makes sense because it's down in the infrastructure layer. It's consumption-based pricing. It's build and deployed through marketplace.
Well, Wiz is the example that I always use. Fast company to 100 million in ARR, and they were born pretty much marketplace native, and they knew that would be part of their strategy because they had experience. It wasn't a question of them if it would work; they knew it would work, and they're like, "We're going to cloud enable our go-to-market system from day one." But a lot of
how are they packaged and priced? Is that like a SaaS base yearly per seat model for Wiz? Was it a consumption?
It's a SaaS contract. Like I think the most common pattern still is contract with consumption. So some sort of commitment and then some sort of usage-based metric on top of that. The pay-go thing's a little tricky still. Like we're seeing pay-go evolve in the way it works with marketplace. But this gets back to the advice to a startup. If you don't have product market fit, and you don't know how to sell and sell repeatedly, you're going to struggle to marketplace. Like you need to be able to have your packaging clearly defined. It needs to be repeatable. You need to be willing to put the price on the AWS marketplace or the Azure marketplace or the Google marketplace. And a lot of times when I say that to early stage startups who don't have experience with that, they're like, I don't know how I'm pricing yet. I'm kind of making it up. I'm like, yeah, well, you're probably a little too early then.
Right. Yeah. So you kind of need to cross into this threshold of, you probably are not sub $1 million of revenue. You probably have millions of revenue, and now you're kind of looking to unlock channels. But that doesn't negate the possibility early on of like, hey, I got some semblance of product market fit here. Maybe I have 100K, 500K of ARR. Now I'm ready to start kind of experimenting with the channel. What does that look like for, like, say, like a seed stage company versus like a Series A company?
Yeah, I mean, I think getting listed is the first step. It's actually the step before that's partnering with the clouds. And I think the spot you need to think about is, where does your infrastructure run? Where do your buyers live? Like, and odds are your buyers are going to live across the 3 hyperscalers, but there'll be some level of density. You'll start to pick up some signals in the early days, but then really the question is, where do you operate? Because in order to take advantage of this movement, you have to check the box of cloud consumption. Like why that's, I mean, the clouds are looking to drive consumption. That's why marketplace is a thing. They want to help their buyers solve problems, which is the ultimate benefit, but that in turn drives consumption. It's a combination of first and third party that gets the outcome that matters to the buyer. So, I think for an early stage company, you have to think about this like distribution. And I do think marketplace, like cloud go to market, will be the default channel for every early stage company. Let's just say company on the $1 to $10 million ARR journey. Some point in that journey, you're going to say, I want to think about distribution and what's the best way for me to initiate a channel strategy. And cloud likely will be that channel strategy. And that's a change, I think, from the past. And then it's like, okay, I know where I run, I know where my buyers live. I'm going to initiate and I'm going to focus on one, because a lot of startups make the mistake of being like, well, it's distribution, I'm just going to throw it everywhere, and people are going to come by and buy things. That's not the way it works. It actually works. You have to lean in and invest in the channel in order to start to get the flywheel going. So if you try to get three going at the same time, that's oftentimes a mistake. It's better to pick one, focus, build the muscle of marketplacing, and then you can scale distribution based upon the demand from your customers.
Interesting. So you're saying get started early, somewhere around the $1 million mark, and focus on a given cloud, given where you have density with your customer base, whether that's Google, Amazon, or Microsoft, and then really spin up that channel and that flywheel with the one cloud, and then look to expand later. That's kind of your advice?
Yeah. We're actually launching a new package this week, and we'll have to figure out how to talk about this in terms of the podcast that enables that, allows people to, like, it's called Explore, because how do you enable people to explore this new cloud go-to-market channel and use all the capabilities of Tackle in order to initiate their journey? And I always think about it in terms of revenue. Like, the most common answer in state of cloud go-to-market we get around revenue people expect through these channels is right now between 10 and 20%. And 10 and 20% for a $10 million startup, it's $1 to $2 million. That's a meaningful component of their business. Right. For a $100 million company, it's 10 to 20. That's like probably the largest channel they have, fueled by the biggest budget in the world. For a $1 billion company, $100 million, it's likely exponentially bigger than any other channel distribution partner that they have.
What is the biggest cloud marketplace revenue gain that you've seen in all your customer base?
CrowdStrike just did a press release last week that talks about their journey to $1 billion through AWS Marketplace. I mean, that's it's a pretty spectacular
story. They did $1 billion just in the AWS Marketplace?
Yeah.
That's crazy.
Wow. And we're seeing, as the later stage companies engage, we're seeing later stage companies set their goals at $1 billion.
Wow.
And again, when you think about that 10 to 20%, and I always ask that question, I'm like, how do you think about your journey to cloud go-to-market? Like, what's success look like in year 1, year 2, year 3? This is an enduring strategy. You don't just flip these things on and shut them off willy-nilly. If you're opening this channel, you're going to keep it for a long time. But what's that revenue journey look like? And most of the time, even the really big companies are saying, I think 10 to 20% of their business could flow in this way. That's
crazy. And going back to the state of the cloud marketplace, which is a great report. I read it, wrote a little article on it, but the number that's stuck with me was this $15 billion number. Maybe you could talk about that.
Sure. Yeah. I mean, we actually predicted a few years ago, based upon the data we had and industry research, that this year $15 billion would flow through the cloud marketplaces. And actually, all the data right now is saying we'll exceed that. Canalys published that they were seeing growth rates at cloud marketplace throughput in the 80% range. We're actually seeing that number be north of 100. And that $15 billion number, like in the very earliest days of cloud, seemed kind of crazy.
Back when I started AWS, we're talking about double-digit millions.
Right.
And now it's billions of dollars. So we're talking about 100x increase in a matter of 5 years. Yeah. And so the CAGR on that's ridiculous. It's doubling every year.
Yeah, absolutely. And I think we're so early in the journey where you look at, the budget allocated to the hyperscale cloud providers, 300 billion-ish right now, growing at 20+% year over year. The B2B software budget, $750 billion, growing at 10% year over year. And this marketplace movement represents those two massive budgets starting to come together. And ultimately, it just makes sense to buyers. They're making big and enduring commitments to the clouds because they want to get out of the data center business. And marketplace enables them to get access to all the tools they need to succeed. It's not just all going to be native cloud services. That's not reality today. So, and I think a thing we're seeing like the combination of big ISVs embracing this movement. And I loved you reference crossing the chasm, because I think we're in that early majority phase where like it's the big up into the right curve. And when people come, they come with big things. That's very different than the early days. So that's one part of the movement. And I actually think we'll see acceleration. We could see growth rates actually accelerate.
Yeah, and people forget how big enterprise software is. I mean, this is a multi-trillion-dollar market. Yeah. And, for it to get up to 15 billion it's just crazy for me, as somebody who's kind of lived through the whole rapid rise of marketplace. And it's a big part of what we look for when we invest in companies, right? Can we help them scale with a partner like Tackle on the marketplace? Because we feel like it is an accelerant. I mean, just the story of CrowdStrike, $1 billion through the marketplace is absolutely bonkers.
Yeah. And we actually updated that prediction in State of the Cloud Go-to-Market this year to be 100 billion by 2026, which and if you think about growth endurance, that implies that this growth rate of 100% will endure for many years to come. And even at that $100 billion mark, we'd be sub 10% of the B2B software market flowing through the clouds. And I always think back to when Andy Jassy would do his keynote at reInvent and just be like, it's so early. Like, yes, AWS is big and we're growing super fast, but it's so early, like single digit
day one,
percentages of workloads actually run on the cloud. And I think like if we're in the third inning of cloud now, we're in the like first inning or first out of the first inning of this marketplace movement.
And that's absolutely, for a guy like me, or guys like us that have lived through this now for 5 years, it seems absolutely just insane that it's still the first inning of marketplace adoption.
B2B software distribution is really complicated. And I think like that's one of the spaces that if you look at all of the innovation happening in the go-to-market tech stack and all the layers in go-to-market from there's this movement around ecosystem-led growth, whether it's cloud or there's a bunch of people in that space, us and others. And then you have the sales, marketing, partners, product, like all stacking together. And you have all these different layers where it's like, these are my clubs. I can play my clubs at different times for different reasons.
Interesting.
And then there's all these tools that think about all those different things. And I think we're still in the early days of seeing this evolution of the way that software is sold, and everybody will do some sort of bottoms up, like pay as you go, usage based. Everyone will do some sort of top down enterprise sales, contracts. Your product will sit in the middle. You'll try to instrument all of it to understand how they connect all together. And then you'll hyper segment your markets to enable people to go on those journeys. But I think there's a ton of innovation.
You're describing this stack of basically go-to-market models. You have the top-down enterprise sales approach. You have the product-led growth approach. You have this channel approach. The thing that was always the concern or the objection, 4 or 5 years ago when I was still working in cloud marketplace was, okay, I put it up there. How much revenue will I get? Like, will the customers just buy it? And what kind of innovations and strategies have evolved over the last few years to kind of answer that question, answer that objection?
Yeah. So I think like in the early days, we would be like, hey, if your expectation is you're going to list and people will just drive by and buy your product, that's the wrong expectation. The way you have to think about this is a distribution play. And you're tapping into the cloud budget. Marketplace enables you to do that. And you're going to use this thing called a private offer, which is custom pricing and terms passed through the infrastructure or marketplace to beat your buyer where they're at. Those things looked more like enterprise deals. They looked like $500K, $1 million, $10 million style deals. And marketplace grew really well with that style innovation. But what's happened as the buyer behavior starts to change and people get this experience, wow, it was really easy to accept a private offer. It was really easy to use a standard contract from the clouds or to put your software on my Microsoft bill or your software on my Google bill. That was cool. I want to do more of that. It starts to change the buyer behavior. And this is where the industry movement around that like top down, bottoms up, pay as you go, the acceptance of buyers buying things in different ways. Even buying centers have changed so much from like when I used to sell software, it was procurement you'd have to deal with. Even if someone's buying something small, you'd end up with procurement, legal. It was a nightmare. Where now the quantity of people inside a company who are empowered to try and buy things is exponentially bigger than before. And that leads to this bottoms up motion. So it's a strategy, and it really comes down to how do you think about selling your software and when do you employ that strategy? It's much more proven today than it was 2 years ago, where we would have defaulted. Our default advice for everybody 2 years ago would have been start with private offers, where today we may say, hey, actually, if you have a usage-based product that's how people discover and initiate your journey, it could be a complement where you could have an enterprise approach via marketplace and a bottoms-up approach, and you offer people two different storefronts to initiate the journey in the way that makes sense for them. So we're seeing, I think we're still in the I don't have a great stat on this one, but it's like my gut says we're still in like the 90-10, like 90% private offer, 10% bottoms up. But I think that bottoms up, like pay as you go purchasing, will evolve significantly over the next 3 years.
Let's think about the groundwork that startups need to do before taking the plunge. What does that look like, and how do they prep for this?
Yeah, I think first and foremost, like, what is your strategy with the clouds? And I've said pieces and parts of this along the way, but I think it's a good way to bring those topics together. Like, as a software startup, what's your strategy with the clouds? How do you run? How do you deliver value to someone who uses the cloud as their primary infrastructure? And then from there, being able to have a very clear definition of the value. Like, it's not just like, here's the thing I do and here's why it's good, but I actually have a very clear and distinct value prop for the cloud. Like in the CrowdStrike example, they're like, hey, they were the first cloud native security platform. That was their value prop in the cloud instance. But that has changed a lot, whether it's you integrate with a set of core services, or you help someone do something faster, or they operate more efficiently. Whatever your value prop is, you want to be really, really clear on that. So I think doing that groundwork from a strategy standpoint is important. The next part's about executive alignment, where I think just taking some time as a startup to think about, as a team, what are your expectations for this first channel and how much are you willing to invest to get that channel going? Because it's going to take a little bit of time. Yeah. So I think that executive alignment up front is important. And that's traditionally like CEO, head of revenue, head of product, head of partnerships, and being like, okay, what does this look like? What are our expectations? How does this look over a 3-year period of time? Because it's not like an instant on, but getting executive alignment around that. And then from there, I think there is a big thing in ownership, like who's gonna own it? Like who's gonna make it successful? And if no one owns it, you're not going to be successful. So as you're doing that alignment, get really clear on who the owner is and what goals you're going to hold them accountable to. Because that's a thing we see a lot of people be like, it's, the head of product and the CRO are going to like co-own this thing. And in reality, they both have really big jobs already. And odds are they could get it launched, but they're not going to get it rolling. So like, who's the person that's going to own that? So be able to answer that question up front. So those are some things I think.
The ownership, what is that? If by stage of company, what does that typically look like? So seed to Series A, it's probably your CRO, it sounds like, and then maybe as you get a little later stage with more revenue, you're probably hiring a channel manager. What does that kind of evolution look like?
Yeah, it's the most common in state of cloud go to market. The most common answer for ownership is a head of partnerships. So, and I do think that's a big signal. Like a lot of times when an early stage company calls and it's like, hey, I'd love to pick your brain on how to do this. I'm like, do you have someone who's going to own it? Like, tell me what the role is. It's not uncommon for it to be a founder in an earlier stage company. And because they're the ones, like, if there is someone owning revenue, that person can focus on the day-to-day turning the crank of the revenue system, where the founder could actually be like, okay, this is a new thing. It has ties to product. It has ties to revenue. I'm going to play a bridge between them. But I think...
How do you answer the CRO's objective where they're like, hey, I'm running this pipeline. And you told the story earlier, which was...
So CRO, I think the most the most common thing is access to budget. Like how when your rep gets the objection of I don't have budget for this, what do you say? Like being able to tap into the cloud budgets, or say like actually using cloud budget as a way to get a first land is pretty powerful. I think the other part with, and this gets into executive alignment, like every CRO at some point is going to be thinking about distribution scale. And then it's a matter of how they prioritize that.
Let's talk about the accessing cloud budget for a sec, because
Sure.
a lot of listeners probably don't know. I think I know what you mean, because I've worked in this for years. But for the audience out there, what is that mechanism, and what's in it for the clouds? By the way, why are they doing this?
Yeah, so when you become a partner with AWS, Microsoft, or Google, and then you get listed in their cloud marketplace, they'll have rules around how, as a buyer, you could use your enterprise commitment in order to purchase third-party software. And the rules vary by cloud, but in general, they're all there, and this is consistent for all of them. So as an ISV, if I'm listed in Marketplace, I can say to my end customer, hey, would it be easier to buy our solution and put it on your cloud bill? And I'm not saying anything about Marketplace. I'm not trying to educate them on what Azure Marketplace is, or Google Marketplace, or AWS Marketplace. They're just like, oh yeah, we have a strategic relationship with Microsoft. Yeah, maybe that's an easy thing. And oftentimes that leads into a conversation with finance or procurement, where finance and procurement, especially if the cloud budgets have matured, they've moved out of departmental budget line items and into these enterprise finance-owned budget line items, where finance is just looking to optimize these spends. And they're like, yeah, of course, we have a committed spend. It's a multi-year relationship. And by putting software on that, it helps us meet our commitments to the cloud and ultimately get a better deal on infrastructure. So that's why it's good for the buyer. It's good for the seller because you can tap into that. It's good for the clouds because it helps them increase and make their commitments more durable. So like as I put more and more software on my cloud bill, it entangles my cloud consumption with third-party software, which is good, and also allows me to grow my commitments over time. And I do think at the end of the day, this is all about usage. Like the clouds are trying to drive usage of the platform. Right. And by being able to meet their customers with the solutions they need to solve complex cloud problems, that in turn drives usage.
Yeah, I love that. So it's kind of like the power of the bundle in a way. The clouds are basically bundling the software. Selection increases the value of that bundle. It's almost like your Prime subscription with Amazon.
Yeah.
You have this multi-year commitment, and now you can, transact all the software that you're already buying, that you already need, and that just increases the power of the bundle. That's what's in it for them. Talk about sort of the evolution of the listing fee or the take rate in these marketplaces. Back when we started this, 7 years ago, this take rate was pretty high. I mean, Azure famously had a 20% take rate initially, and they recently lowered it to 2%, 2.5%, something like that. Maybe you could
3 somewhere around there.
Tell the audience about this. Yeah.
So every cloud has, like every marketplace has some sort of fee that they charge if you're taking advantage of them from distribution. And Apple, there's been a lot of like public things about what Apple does with the App Store and some negative press around that. And but the clouds have their own version of that. And what's happened over the years is, as this pattern has become more clear, they've been optimizing the fees for the value exchange and to drive incentives for sellers to sell and buyers to buy. So currently, fees have been eroding over time. They did start at that 20% range. They're probably in like the 3 to 8% range. And when you compare that to any other channel in the world, it's actually pretty inexpensive from a software distribution standpoint. And most other channels don't give you access to budget or access to a standard contract. So they've optimized the fees to align with the value prop that they think makes sense for a seller in order to take advantage of these platforms. So it does. And there's an interesting conversation around, like, I'll get the question from some people like, well, should I just like hit my reps on those fees? Like, I'll just take them out of the deal because that makes the most sense. I don't want to have to pay this cloud fee. That makes no sense. But that actually, when you're trying to create a new channel, that's the worst thing you can do. You actually want to incent your sellers to be able to take advantage of this channel. So you can embed
Right.
these fees into things like cost of goods sold, where you're not passing it on to the reps. You're saying, hey, reps, there's a great way for you to make your number. Everyone needs to know how to win with cloud, and we're not going to penalize you for it because ultimately we're just going to put that into cost of goods sold.
So what's the future for Tackle Hold? What is, where is this company in 5 years? And let's even ask I started asking this question to founders. Where do you see this in 25 years?
Yeah, it's I think for us, we really want to just continue to enable cloud go to market. We think it's really early, and we've invested a lot of time to expand the platform from marketplace to marketplace, enabling cloud co-sell, which is the partnership engagement with the cloud providers, as well as using data to map your pipeline to the cloud providers. We manifest that whole experience inside of Tackle. And based upon our customer demand, especially at scale, we manifest that whole experience inside of Salesforce. So, and I think 5 years from now, every rep will know how to win with cloud. Will this be the default way that they sell? I don't know. Will it be a way that they're very comfortable with? I'm not a golfer, but everyone understands the golf analogy. It's like the 7-iron. It's a very comfortable club in your bag. Do you hit it on every shot? No. Do you use it regularly and you know how to play it? Absolutely. I think, for us, the next 5 years are about bringing that to life, bringing it to life at scale, getting all ISVs to be able to transact 10 to 20% of their business in this way. When you fast forward 25 years from now, I think we're still so early in changing, like e-commerce, the evolution of e-commerce. You think about B2C e-commerce versus B2B e-commerce. B2C has gotten pretty mature. B2B lags. Most B2B businesses operate in the Stone Ages. Like it's like the concept of even like this idea of a private offer being able to pass custom pricing and terms electronically in order to accept a deal and then ultimately get payments through a distribution is a pretty modern concept for B2B.
Yeah.
So I think there's a lot of evolution to come in B2B e-commerce, especially B2B multi-channel e-commerce. And I think there's this company Shopify in the more like consumer internet space where they change the way SMB operate online and pretty much make online presence ubiquitous in the industry. What will be the answer for that for B2B software or B2B holistically? And will there be a Shopify style company in every industry vertical where there'll be one for all of software that doesn't just think about cloud go to market, but thinks about, sales and marketing? And will there be a hyper consolidation of that digital selling tech stack? I think the next 25 years have a ton of innovation to still come there. And I do think, there's an opportunity for consolidation and streamlining of those processes. And we keep thinking about it from the workflow. Like, what's the workflow that the ISV really wants? What's the workflow that the buyer really wants? The buyer wants to be able to get access to what they need when they need it, be able to make decisions really quickly, experiment fast, understand how it helps them, and get to the outcome they want. The seller wants an efficient go-to-market system that doesn't cost them $2 for every dollar new ARR that they bring in. They want to be able to meet their customers everywhere they want them to be. They want it to be really seamless and integrated into their backend. Like, there's a lot to come to bring that future to life. So that's what we are thinking about.
So why don't we switch to a rapid fire round? I'll ask a question and you just tell me your initial thoughts.
Sure.
AWS, Azure, or GCP?
Oh, that's a tough one. I'm going to answer it on behalf of an ISV. Where does your platform run? Where do your buyers run? Like, that's where you should think about starting.
Yeah, I love that. SaaS or on-prem?
SaaS all day long. Like, on-prem is... I was listening to the Grit podcast, and there was a great quote from the CRO of Snowflake where he was like, hey, the founder of Snowflake, big bank, was like, when are you guys going to have an on-prem version? And he's like, you'll be in the cloud before we'll be on-prem. Like, I think that's the same for SaaS. Like, you'll be SaaS. Everyone is going that way.
I love that.
It's, again, still, I think we're past early days for that. But
yeah. First business book that made an impact on you?
You hit it already. I'll actually come up with a different one. My answer was crossing the chasm to
Yeah.
this.
A lot of people's answers. Yeah.
But there was one probably before that. I haven't read it in so long, but I read it in high school, which was How to Win Friends and Influence People, which
Oh, yeah.
impacted me a lot in high school, just to like think differently about the way to engage with people. But I love Crossing the Chasm.
Yeah. Well, thank you so much, John, for coming on. I know there's lots of founders out there that are going to benefit from this conversation as much as I did. Thanks again for joining us.